Richard, you have another 15 minutes to do another module, another topic.
Perfect.
Okay, so okay, this we can discuss, Richard and I, we can discuss people. Let's talk about financing. Let's talk about mortgages. It doesn't matter if it's a home owner occupied or investment loans. Uh, People just take it for granted. Oh, we have mortgages available to help us buy a house, but you need to realize it's not a, don't take it for granted. I mean, I've been doing this for a long time, Richard, and as well. Do you know in other part of the world, in other countries, to my knowledge, there are no other country that have the type of mortgage that are available that we have here in the U.S. So it's amazing, right? If you do not take advantage of leverage, whether you buy an owner-occupied house or rental property using financing, I mean, you're missing out. You are throwing money in the toilet by not taking action and buy rental properties using financing, because not only for overseas investors to buy a property in the U.S., either they have to pay by cash or they have to get a hard money loan or non-Fannie Mae qualified loan like 50% down, whatever, right? It's very, very difficult for people from other countries to get financing to buy U.S. properties, although they do it a lot because they have a lot of money, they buy with cash. But also, I mean, okay, I'll go back. Okay, I'm older than Richard, so I go back like in mid 80s, in the early 80s. You know what's the interest rate on a mortgage back then? Like 15 to 18%. Think about that. And yet people are still doing mortgages at that time. People are still buying owner-occupied homes. People are still buying rental properties with the interest rate, which is, come to think, it's just mind-boggling, right? I mean, as I reflect back in the past history. So for you guys out here today, we're going through a record low interest rate in a mind-boggling historical basis. I mean, owner occupied, you're getting less than 3%. I'm not sure. I mean, Richard would go for investor, you're getting like mid threes. This is mind-boggling. The ability for a bank or a lender to trust you, to give you a loan based on your good credit. The fact that as an investor, I mean, a lot of people does not have good credit. You and I know that. A large segment of the U.S. population can't qualify to get a loan, don't want to get a loan, too scared to buy a property, or whatever. And it's really sad and tragic. They are not, their money management skills are severely lacking because money education, financial education is severely lacking in the U.S. for years and years, for decades. So, we work with investors that many of you on the verge of pulling the trigger, buy and rent property with a mortgage, and yet many of you still won't do it, can't do it, even though you qualify. So think about this. I mean, this opportunity, this window to get leveraging, when you have good credit, the lender already trusts you. They're willing to give you, 75, 80, 85% leverage. They're risking their loan, their money. You're only risking 15, 20, 25% of the asset that you're buying. I mean, this is mortgage these days is like, hate to say this, like a free money. The banks are almost giving you free money to leverage your wealth through rental property purchase. Think about this. This is mind-boggling for those of you that have the ability to use the amazing financing available to you to leverage your wealth and do not do it. Shame on you. So, Richard, okay, I'm very blunt because I've been around a lot longer than Richard, right? And I purchased my first home back 30 years ago in Bay Area. I purchased two principal homes in 30 and 25 years ago. My homes are quadruple over the years. And anyway, so all right, Richard, you as a lender, I mean, what type of motivational speech you need to impart and instill into people right now to get them off the rocking chair and pull the trigger before they will lose out. Good, Richard.
Yeah, I mean, it's so competitive out there right now. I think what I'd say is don't go buy any properties. Save more for me and for SeeWing and everyone else. No, I'm kidding, but it's crazy out there right now, and with how competitive it is, and that's because most people realize that the real estate market is far not only from correcting, there's still so much demand and such little supply that it's not going to get any better than it is. You know, prices are going to continue to go up. I think I was hearing on CNBC, and I know you mentioned an article as well as SeeWing, where there's, I think, the need for 5 million homes in this country right now, and I think they're only building 1 million in the next year. So, yeah, I mean, look at simple economics, everyone. Supply and demand, right? There's not a lot of supply and a huge demand, and for the foreseeable future, that's not going to change, which means that prices are going to stay, where they are, and they are likely going to keep going up, and then rents are going to follow as well. I was reading another article talking about rent inflation and how, although rents have gone up a lot in the last year, the home prices have gone up a lot more as well, and rents already had some laggard to catch up on. So, rents are projected to go up as well. And then factor in, the fact that, yes, okay, house prices are a lot higher than they were. Doesn't mean they're too high. Doesn't mean they're going down, but they're a lot higher than they were a year, 2 years, 3 years ago. But the interest rates are the lowest they've ever been by miles. And most people are realizing that makes up for the prices being high right now. I mean, we have a rare opportunity where inflation's going up dramatically. Rates are super low. I mean, who knows what the real inflation rate is right now, but my hunch is it's very close to what the interest rates we're paying at on these rental properties, which means you're getting free money. And, the cost of bread's going to go up. The cost of rent's going to go up. The cost of, a cheap economy car these days is what, 25, 30 grand? Used to be able to buy a car for 14 grand. And 10 years from now, the same thing's going to happen. Everything's going to be way more expensive today because of inflation. And that's not my opinion or my thoughts. That's how the world works, right? Inflation is 2 to 3% every year. 10 years later, something you bought today is going to be 30% more expensive, right? So you're going to have a fixed 30-year mortgage, 10 years, 15 years, 20 years from now, when things have gone up 60% higher. And guess what? Rents are going to be dramatically higher as well. And that's how you build wealth. Like, real estate's not going to make you get rich in 2 or 3 years. Now, maybe you bought a high cash flowing property 2 or 3 years ago and it did make you rich, but that's not how we recommend you invest, just based on that, right? You invest long term. Yes, we've all done very well in the short term as well, but you can easily, not investing on the right fundamentals, get caught with your pants down. If you're just investing purely on, I still have people buy properties in California losing $1,500 a month because they want to invest for the appreciation. But obviously, you invest long term. You take advantage of the low interest rates. You take advantage of inflation. You take advantage of the fact that 7 years, 10 years, 12 years in, you start paying so much more principal on that loan and building wealth on the back end. You are going to do well in real estate. And you do need to look at it as a long-term investment, and sitting on the sideline is not going to get you anything.
Yeah, Richard, let me say this. Okay. Real estate is amazing. It's a multi-dimensional asset. You know why? Because your tenant is going to pay off all your obligations, your mortgage, your taxes, your insurance, your property management fee, the 5 or 10% maintenance factor you have to pay, and then and all the vacancies, the rent you're collecting, your tenant is going to make you rich, and there are plenty of tenants out there. So there's no other asset class, there's no other investments in the history of the world that where once you put 15, 20, 25% down payment to buy a rental property, you can recoup your down payment money maybe in the first year because of the appreciation of the property, maybe at 10%, right? And if the appreciation is not 10%, maybe 5%, you can recoup your down payment in about 2 or 3 years. And then beyond that, it's almost like it's an automatic a thing for years to come, because beyond that, I mean, all the cash flow, all the appreciation beyond the money you put in for the down payment, or like free. I mean, it's such a powerful asset. Think about it, right? Your tenant, your high quality tenant is this is mind-boggling. And it just is amazing to think about it, right? I mean, how could someone gonna make you rich? I mean, you have tenant paying down. I mean, assuming you buy a cash flow property, of course, right? I mean, in a good market and so forth, and right, you use the right team. But this is amazing. People, you need to really sit down, just analyze, you know, the power. I mean, tenant paying down is making you rich. It is that simple if you break it down. So again, we'll, I think we're concluding our presentation. So Richard, one final word, you have anything to add about what I just said?
Yeah, I was actually looking down because the treasury, a 10-year treasury yield, which mortgage rates are loosely based off of, is up like 6% today. So about the highest, that it's been in the last year or two. And by tomorrow, our mortgage rates are going to go up a little bit as well. And the general projections are going to stay pretty low throughout the end of the year. But even if they go up 0.25% to 0.5%, that's still pretty low historically, and even versus a month or two ago, excuse me, a year or two ago. So, yeah, I mean, as we're sitting here, the reasons for waiting are getting smaller and smaller, right? It costs you money to sit on the sidelines, and if you haven't started anything yet, you better get started, because right now you're getting investor loans in the mid to high threes. If it goes to the mid to high fours a year from now, that's going to cost you a lot of cash flow and a lot of wealth, and you're definitely going to regret it. So let's take advantage of these low rates while we can.
Absolutely. With that in mind, I think that's pretty much it. We're running out of time. Once again, thank you very much, Mr. Richard.advani, from Supreme Lending, an awesome loan broker, loan consultant, real estate loan advisor. Thank you so much for attending, and we'll see you next time on another topic on another podcast. Thank you so much to the SeeWing Yee from the Yee Real Estate Network. Have a nice day. Bye-bye.